Hey now, I'm back with an exclusive trading system inspired by a Traders Landing community member that uses multi-time frame confirmation and produced fantastic results over a series of 100 trades. Just be sure to stick around to the end when I show you how to make this strategy even better with my popular optimization tips. And check out my new channel, Crypto Landing, where we are pumping out high yield alpha. Just remember, if you are not subscribed, then your next trade can wind up like this. I call this system the Benz Bounce. And like most trading systems, it can be adapted to Forex, crypto, options, stocks, indices, or any instrument that has significant volume and market participants. This trading strategy utilizes two free TradingView indicators. As always, links and settings to all indicators are listed in the description below. The first indicator is the standard super trend, set at default settings and style. The super trend is a trend-following indicator based on the average true range, and it consists of a single line, either green for bullish trends or red for bearish trends. This indicator will be placed on the 4-hour chart and will be used to determine the higher time frame trend. The second free TradingView indicator is the standard stochastic study, and it will be used on the 15-minute chart. Inputs will be kept at default, and I am going to thicken the lines so you can see it more clearly. The stochastic study is a popular oscillator with overbought and oversold areas in an attempt to determine trend reversals. In the Benz Bounce, this indicator will be used for both entry confirmations and triggers. Let's go over entry criteria and review some examples. As always, system rules and details are listed in the description below. This chart is Bitcoin versus the US dollar 4-hour candles on the top chart and 15-minute candles on the bottom chart. The rules to enter along on the Benz Bounce are: first, we can see that the super trend is in a bullish phase on the 4-hour chart. Then we can see hidden bullish divergence on the 15-minute chart, a higher low on price, and a lower low on the stochastic. Third, the stochastic enters the oversold territory. Finally, we get a cross up of the stochastic. Our rules are met when this candle closes. That is our trigger candle. The stop is placed at the immediate previous swing low and target 2 times risk. And long example 1 continues to the target. If you enjoy this content, make sure to click that like button. I have one more long example. The super trend is green on the 4-hour chart. There is hidden bullish divergence on the stochastic oscillator, a lower high on price, and a lower low on the indicator. Third, the stochastic enters the oversold zone. And finally, we get a cross up of the stochastic. Everything converges on this candle and it serves as our trigger. The stop is placed at the previous swing low and 1 to 2 is our target. And our trade is closed in profit on this very bullish candlestick. Now we flip to shorts. This is what I will test for shorts. First, we can see the super trend on the 4-hour chart is indicating a bearish trend. Second, there is hidden bearish divergence on the 15-minute chart, a lower high on price and a higher high on the stochastic. Then we can see the stochastic goes into the overbought territory. Finally, there is a cross down of the oscillator. Our rules converge on this candle and it serves as our trigger. The stop is placed at the previous swing high and the target is 2 times risk. And after almost stopping out, short example 1 hits the target. I'm going to show you one more quick short example. 4-hour chart is showing a bearish super trend. There is hidden bearish divergence on the stochastic, a lower high on price, and a higher high on the indicator. Then we can see the stochastic enters the overbought territory. And finally, there is a cross down on the oscillator. This is our trigger candle. The stop is placed at the previous swing high and the target is 2 times risk. And the final example crushes the target. I'm going to give you some great ideas on how we can improve this system along with a Traders Landing score. And now it's time to do what I do. If you enjoy this content, hit the like button. Remember, this is just 100 tests on one instrument. If you are thinking of using this system, please do extensive back and forward testing and be sure to let our community know what you discover. This system was presented to me by a Traders Landing community member who wanted some help with his trading system. I just added some secret sauce to it, but his system was a great starting off point. If you want to see the original post, you can log on to our Circle community. This test was done on Bitcoin versus the US dollar using both 4-hour and 15-minute Japanese candlesticks. It took 7 months to find the 100 setups. This dataset produced a 54% win rate, but there is a caveat to that which I will explain in a moment. Most winners in a row came in at 6, and that is paired with 4 consecutive losing setups, which is not a bad ratio. The maximum drawdown was 5% and the profit factor was an impressive 2.35. Risking 2% per trade, the total gain on account was 124% minus fees and spreads. And I have some additional ideas on how to further optimize this particular trading system. The equity curve here is very impulsive with only 2 areas of consolidation. Remember, this is just 100 tests, so you have to make sure to keep testing different time periods on different instruments. Additionally, crypto is highly correlated, so if you are a crypto trader, your data set is inherently limited. I give this system a Traders Landing score of 8 because it accounts for the higher time frame trend, uses an oscillator in the correct way, but the test did not account for spreads and fees, which in this particular setup can be problematic. More on that next. Remember, the enemy of great is good. I have 6 ideas on how we can improve this system. First, never blindly follow a trend indicator. On this chart, we can see a bearish super trend, but the market is clearly moving sideways. You always want to confirm what the indicator is telling you with price action. For me, this would be a no trade zone, as there are no lower highs and lower lows. The indicator in this instance is superfluous. Second, when the market is really trending, regular divergence can provide great entry points. On this chart, we can see a very impulsive move to the downside with a consolidation level that comes with standard divergence. This is a great spot to get in and profit from a very nice trend continuation. The biggest problem with this system as presented is that the stop loss most of the time is what I would consider to be too tight, especially for exchanges and brokers where the spreads can get wide. On this chart, you can see that a tight stop loss gets wicked out before going in the direction of the profit target. Additionally, you can see the exact same thing happen here, but in the opposite direction. There are some strategies you can use to mitigate these kind of stops that plague this system during my test. First, you can use an ATR value of the trigger candle to set your stop. In addition, using an obvious support level as a point of invalidation may be the best way to go. Furthermore, you can simply put a moving average on the lower time frame chart as a point of dynamic support. Continuing on, combining the higher time frame trend and using a dynamic take profit method on smaller time frame can really increase your gains over the course of a series of many trades. Using a sensitive super trend on the lower time frame as an exit signal can yield some huge results, like this one with a phenomenal 1 to 11 risk versus reward. Next, the thing I really like about this system is the multi-time frame analysis, but you can change those up depending on your trading style. If you are a fast scalper, you can combine the 1 minute with the 15 minute. If you are a swing trader with limited chart time, daily candles and the 4-hour chart make a great combination. Most of the best technical traders perform multi-time frame analysis almost without exception. Furthermore, and this is just my experience, but the stochastic RSI is usually more responsive to price action than the standard stochastic, especially when trying to spot hidden divergences. Here we can see the stochastic RSI gets you into this huge move that the standard stochastic misses. Sometimes it is good to use both, as I have shown before on other systems presented on the channel. If you want to talk to me and interact with our community, in addition to supporting the work I am doing here, you can do so for free by registering for our Circle community. And those who pick up a preferred or elite membership will have access to the discussion and education spaces in addition to the TradingView automated scripts and a private video on my personal trading system. Thanks for watching and have a great day, because you deserve it.